Good afternoon, personal finance students. A question has been raised by one of our students, a fellow student by Jake Packham, where he is asking about the projected estate tax liability that is part of the assignment for lesson 12, estate planning. It's a great question. I felt like also I got a text from another student, from Kate, that said several students had questions on this. I thought it would be best if I maybe just showed a couple of resources of where you would get the information in order to answer Jake's question and everybody else's question. So let me first start by going back to the PowerPoint that was part of the lesson material. Slide 25 of the PowerPoint talks about the exemption amount and the top estate tax rates. And here, in the first bullet, it talks through only the value of one's estate in excess of the exemption amount is subject to the estate taxes. So that's our first clue that we need to understand, well, what is the exemption amount? And obviously it goes on to say it changes every year. And then it says the top estate tax rates change each year as well. So, okay, we need to go and we need to find out what are those, what's the exemption amount and what's the top estate tax rate. So let's put that to the side. A quick search within Google search of irs.gov can get you to what you need. First, let's just talk about the estate tax, right? It talks about your gross estate. It includes property that may consist of cash, securities, real estate, insurance, trusts, annuities, business interests, and other assets. And then there's also then these deductions that you can make off of your gross estate to determine what your taxable estate is. I'm going to assume that most of the assets in a gross estate are going to be deductible, like a home, real estate, and so we're just going to keep it at that. But if you go and you look for, well, what's the estate and gift tax? Here it talks through a couple of things. Number one is what's the exemption or the exclusion, they call it here. But the basic exclusion amount, right, which says, look, anything below this amount is gifted and can be gifted with no taxes. And in 2016, that amount is $5.4 million. So if you have assets by way of stocks, investments, property, etc., that total less than 5.4 million for an individual, and it's actually 10 million for joint filers, then you would be exempt from the estate tax. Again, going back to the PowerPoint that we talked a little bit about, you have the exemption amount, right? That's what we're talking about here. Is we're talking about the exemption amount. And that, again, that is found with this quick Google search. Here it's 5.49 million, or for a couple filing jointly, it's 10 million. And so the other question now becomes, what's the top estate tax rate? And you can see here where the estate tax rates have seemed to change over the years, where the top tax rates decreased from 55% in 2001 to 35% in 2010, and then they increased to 40% in 2013, which is where they are today. So if indeed you have assets that are in excess of 5.4 million in your assignment, then you would apply this tax rate to the value of those assets, 40%. So let's go to the assignment really quick, and let me just maybe hopefully illustrate that for you. So here's an individual who's age 43, spouse is 40, current assets are 380,000, real estate and other assets 550,000, total assets just under $1 million. Total debt on those 385,000, current net worth, which is really just quick math between your assets and your debt, 545,000. So current state tax liability estimated would be nothing. Why? Well, because it's less than 5.4 million, or in this case, because they're married, it's less than 10 million. So there would be no estimated estate tax liability at this point in the individual's financial life. 10-year projected, this individual is saying, okay, well, the assets will go from 930,000 to 1.9 million in 10 years. So when they're 53 and 50 respectively. In 20 years, it's going to increase again. It's an estimate, right? 3.4 million. And then in 30 years, and I haven't gone on to continue, but then probably at 30 years, this person would be in retirement. And so there's more than likely this value would be decreasing because they'd be using some of those funds during their retirement years for living and enjoying life, so forth and so on until the end. As you can see in this example, never does the assets exceed the exemption amount. Again, 5.4 million for individuals or 10 million for couples filing or married filing jointly. I hope this has answered all of your questions and that you're able to put together your estate planning tools in maybe a better way. If you have further questions, feel free to reach out and ask me further. Thanks. Bye.